Good morning, everybody. Hey, welcome to Tuesday, August 17th. I hope that your week is off to a great start. Hey, yesterday ended up kind of in the doldrums, but ended up actually in pretty good shape. It started down, ended up up. So good news there, at least across several of the indexes. Remember, before Dave joins us here in just a second, remember, there's only one thing that any of us can control within our portfolios, and that's how much risk you have. With the volatility we're seeing, the closer you get to retirement, the more important it is to know what your risk number is and how much risk you have in your current portfolio. To find out, give us a call, 863-382-0037 to schedule your financial x-ray. And with that, hey, Dave will be with us next.
What? Hey, Usher, Pitbull, you're more than welcome. All right. It's 8:40 down. Time to check in on your money and see what Sam Hill's going on Wall Street. Well, went up yesterday, down on Friday. Let's see. It's Tuesday. We're probably going to head down again. It's kind of like that these days. Let's see what's going on downtown Sebring. We go to the offices of Statler Financial Services. Phillip Statler is back in all his glory. Phillip, good morning. How are you?
Good morning, buddy. How are you doing?
I'm doing okay, surviving nicely. Yesterday morning, we were looking at kind of a blasé beginning to the week. On Friday, the consumer confidence report came out, and I noticed that on Friday, the intraday chart just kind of took a knee downward by about 100 points when the consumer confidence number came out. Then we got the Empire State Business Index showing an unexpected decline yesterday morning, and things started out. We just cannot stop going up, though. Still eked out another record close in the Dow. And, yeah, by definition, it was a record on the Standard & Poor's because the day before was a record, and we gained a little under 12 points. And NASDAQ just kind of fritters around, but 29 points down doesn't sound like that much. You'd almost think things were going great, wouldn't you?
You would. I mean, I looked at I wasn't with you yesterday, but I was looking at the futures. I thought, oh man, Dave's going to have a rough day this morning. And lo and behold, I look at the closing prices and man, 2 new records set on the Dow and the S&P. I mean, that's just incredible. And you and I both scratch our heads trying to figure out why.
Yeah, that's the weird part. I mean, okay, fine, we had a chink in the armor, and the market is responding to the reports as they come out. Like I said, on Friday, I was watching at 10 o'clock. A consumer confidence report comes out, shows that we're as bad as we were last spring in terms of attitude. And, yeah, the Dow knees downward by 100 points and then drifts right back up to a new record. Yesterday, we start out with the Empire State Business Index, how well New York is doing. It was really a disappointment, and doggone, we kneed our way downward on the futures and then crawled right back up to another record. So might happen today because, boy, retail sales last month really sucked, didn't they?
They really did, Dave. It was a substantial miss, I would say. Retail sales overall was down 1.1%. Now, they did expect it to be down, but only by about 0.3%, coming off of June's plus 0.7%. So not exactly what everybody expected. And then, we have to take out autos. And so we take out the autos in retail sales because those are high ticket items. We still was a substantial miss, and we were down 0.4%. They expected us to be actually up 0.2% positive. And Dave, I look at June's, and that is a huge disappointment from June because June was up 1.6%.
Yeah, it was. There was absolutely nothing good out of the economic data dumps we got this morning. I mean, when you miss retail sales, and we expected shrinkage anyway, by almost a margin of 4-1, and then go completely the opposite direction once you take the big ticket items out, it kind of makes you sit back and go, okay, well, we're over a process of 2 or 3 months. We're going in the right direction if you take data points, but doggone, we just aren't growing as fast as we expected. But evidently, the guidance that the companies that are giving on earnings season, it's turned into a good earnings season, and the reports that we'll get to in a minute or two are looking pretty doggone good as well. So what do we say to these kind of reports?
Yeah, it's hard. It's hard to digest why we're seeing things happen the way they are. Again, I reflect back to the first bear market that I rode through, which was back in 2000. And at some point, bubbles burst. And the question is, when does this one burst, and what's it going to take? What's going to be the causal to make it happen? And because that is the issue. There's nothing really driving this market upwards other than people don't have any place else to put cash. So they're gambling, afraid they're missing out on gains. And so this is where the little guy gets hurt.
Yeah, exactly. I don't know whether bubble is the right description or whether it really, but when the indications are going one way and the prices are going the other, that does tend to have harbingers of a bubble ahead, doesn't it?
It really does. And so that's why I think, making sure your risk is allocated properly, your portfolio now is more important than ever.
Understood. Hey, you had a figure that I found kind of intriguing. I dived into a Facebook chat over a local business that had some trouble getting supplies in, so consequently their service wasn't quite as fast as habitual, and there was shipping delays and supply delays. You found account for how many of those big carrier ships are waiting outside of the Los Angeles harbor, and it's enough to really blow your mind, isn't it?
It is. It's actually the most we've had, except for -3. So back in February, we had 40 ships waiting to get into the LA port. Now we have 37. They say it's like a 6.2 day time frame before we can get those ships in here. So that's a pretty devastating number. How long it's going to take those ships to get in here and get unloaded.
Yeah, you got to keep in mind too. I mean, when we talk about boats in the harbor, we're not talking about ore boats like I'm used to seeing up in Lake Michigan. These big container ships, each one of them carries the gross domestic product of a small African nation. I mean, these are big boats.
Exactly. And they got a lot of stuff in them. And
yep,
they're
probably a few tips for a few car makers.
Yeah, a lot of things we need, and we need to get them unloaded.
Like absolutely, that's probably the reason of your garage doors taking a little longer to get in than you expected. Well, doggone it, guys, it's probably sitting on a container ship in Los Angeles right now. Earnings season continues, and well, let's start out with the real high point. Even though their stocks go in the wrong direction, Walmart really kicked butt last quarter, didn't they?
They really did. They beat by 21 cents a share, came in at like $1.78 for the second quarter. Revenue above expectations as well. Same store sales grew by 5.2%. So some good news there. I dug a little deeper into Walmart just to kind of look. Their revenue was $141 billion. That was up 2.4% from last year. And up about $3 billion more than what was expected for the quarter. Earnings per share of $1.78. Last year, same time period, they were up $1.56. They were expected to come in at $1.57 this quarter. So the 178, a big thing there. And again, same store sales were expected to be about 3%, came in at 5, a little over 5. So, good news for Walmart, and they have flipped green, Dave, barely, but up about 1/3% right now.
Wow. And, when you look at a 3% same store growth rate, you got to keep in mind 12 months ago this quarter, they were about the only store open in a lot of towns.
That's right. They really were. And so, they've really have managed to progress pretty well.
Absolutely. We got some other indications, some other blue chips that came out. What have you got?
So I have Home Depot. Again, they had a good quarter. They beat by 9 cents a share. Revenue was ahead of forecast as well. Same store sales, though, did fall a little short. And they are seeing the do-it-yourselfers kind of slowing down a little bit, right? They don't have the time because they're going back to work, and they don't have the money because there's no more stimulus. So they are, that's the issue with the do-it-yourselfers. And so they're trading down this morning about 3.5%.
Ouch. I noticed the sector is dragging Lowe's down, too. They're right on Home Depot's heels, down about 2.5% this morning. So bad news for one of the behemoths doesn't help the other one, even though they didn't report.
No, it really doesn't. So I really have two more for you. The other two really are not going to be household names we've really heard of, but one's Roblox. They're a video game platform, and they lost 25 cents a share. That was 1 cent more than expected. Revenue also missed. So they're trading down 7% this morning after closing down 5 yesterday. So a big miss for them. And then this one, I remember reading about them when the pandemic first started. A company called Endeavor. They're an entertainment company that that does a lot of live events, from sporting events to concerts and that type of stuff. They reported a profit of 19 cents a share. They were expected to lose 2 cents a share. So good things for them. Revenue though was a slight miss, and from that standpoint, and they're actually trading up substantially this morning, up 5.6%.
Nice to see somebody going up, even in the face of a good report, because it ain't necessarily a good day for your stock price, no matter how you did. Setting the table again this morning, it was an up day for the blue chips yesterday. Couple of new records, even in the face of some marginal economic news. Well, based on the economic news this morning, I'm looking at some red on my futures numbers. 45 minutes. Where are we going anyway?
It's pretty red, Dave. It's not as bad as it was earlier this morning when I first started looking at the indexes, but we got the Dow down 0.5%. We've got the S&P 500 down about 0.4%, and the Nasdaq's down 0.5% also. The big loser is going to be the Russell 2000, down a little over 0.8%. So with all that, we've got the VIX, that's the volatility index, actually heading up about 2.5% this morning. On the commodities side, we've got silver flat right now. Gold is up a little over 1/10%. It's trying, Dave. It's trying really hard to get over 1,800 again, but a little short right now. And then oil looking for its 4th or 5th day decline, down 1/3% to $66.83 a barrel right now.
And the only reason I'm not happy about that is they're racking that up to demand concerns over in China, which isn't the reason you necessarily want to see it go down, right?
That's right. And they're looking at least in Florida, demand here too.
Oh yeah. As we're flying and driving a little less, as we start to panic a little more about the Delta variant. Overseas markets, the Asian rim generally off this morning at the close. China had a bad day. They were down 2 full percent on the Chinese composite. Europe doesn't know what to think about us either. It's a mixed bag. I got France down by over 0.5%. Great Britain is up by 0.25% midway through their day. They can't figure us out either. So, Phillip, we're not alone. Somebody need to get some advice as far as insulating yourself from the ups and downs that nobody can explain, whether they're European or talking heads on the radio. How do I find you, Phillip?
David, give us a call at 863-382-0037. Remember, risk is not always your friend the closer you get to retirement. So give us a call for our financial x-ray at 863-382-0037. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30.
And back here again tomorrow morning, same time with an update on Light. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
All right, folks. So again, I want to thank you for joining us today. I hope that your week's off to a great start. Hey, join us again tomorrow morning or check us out on Facebook. Thanks again. We'll talk to you again tomorrow. Take care. Bye now.